Hi guys, this is Victor with LMS CPA. Welcome back. Financing a college tuition here in the United States, oftentimes you have to take student loans. Why? Because if you really think about it, it's a long-term investment. It typically goes for several years, right? Pay tuition, room and board, other expenses related to tuition. That takes longer, and most people do not have the means for them to finance a number of years worth of tuition. So many people, most people, have the opportunity to take student loans. And the great benefit is that the Internal Revenue Service and the U.S. government can give a tax break for you to deduct the expenses related to tuition and education. So you might be asking, okay, so what's the limit? How much can I deduct? Okay, so basically the limit is $2,500 a year, right? And it's subject to phase outs, right? But you might say, okay, Victor, but 2,500, why so little? Well, guys, I mean that's the limit, right? And you pretty much have to take advantage of every single dollar that you have. Every single dollar counts. Okay, so do not complain for $2,500. Okay, do not say that's too little, because every single dollar counts. Okay, so don't forget that. So you might be asking, what are the qualifying loans? Okay, so the qualifying loans are the loans that cover the following. Number one, tuition. Number two, room and board. And number three, other expenses related to the education. So let's talk about number one, tuition. Tuition is actually what you pay for you to be matriculated in the school, right? And what you pay for classes, what you pay for books, right? You pay for labs and the maintenance of the facilities and so forth, right? That's number one, tuition. Number two, room and board. So oftentimes, students may need to live on campus or off campus. So the money related for you to pay rent for your dorm, or the rent for the apartment where you live in, or the student lives in, those are definitely included. And number three, we'll be talking about the other expenses related to education. And this is somewhat broad, right? Because you might think, okay, so Victor, what are some of these expenses? Well, think about it. Computers is definitely included. Meals is definitely included. Insurance is definitely included, right? You do not want to be extremely creative there. So the funds may be borrowed to cover the qualifying expenses of the taxpayer, of his spouse, and dependents. The student must be a degree candidate carrying at least half the normal full-time course load. And also, the loans taken to attend certain postgraduate programs can also qualify. So you may be asking, who gets a deduction? Well, the only person legally obligated to make the interest payments may deduct them. So for example, if the parent make the payments on the child student's loan, the parents are not allowed to deduct it, and their child could deduct the interest they paid as long as the child is not included in the parent's tax returns. And the AGI limits for 2021, no deduction is available with AGI of more than $85,000 or $170,000 for couples that filed together. And as I said before, guys, $2,500 might not be a lot, but it definitely helps, right? Every single dollar helps. And if you need help, if you need guidance, if you need additional information, if you have student loans and you want to know how to deduct this in your taxes, please see the information here below. Give us a call, contact us, and we'll be more than glad to help you and give you additional guidance in your tax and in your financial and personal journey. And we'll see you soon.